Rule number 2, I like a strategy called the barbell approach. Now, this takes a lot of discipline for me to utilize, but it's helped me tremendously. I have my portfolio divided into 2 sides. On one side is super stable, conservative, non-volatile assets, the boring stuff, right? Like cash and real estate and gold, things that don't really move that much in terms of price, but do a decent job at retaining purchasing power.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the 2 most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode.
And I have nothing in the middle in the broad equities market. On the other side, I have super high risk opportunities like the companies out here in the junior mining sector. Now, the reason for this is that I want to make sure that I can go into the high risk sector with confidence. And the only way I can do that is if I'm certain that if everything goes south on the high risk side of my barbell, that I've got enough on the stable side to sleep well at night, all right? No, I don't play the middle of the market because I don't have a competitive advantage there. I can't outcompete you buying Tesla shares. I just can't do that. But I can hit this industry and do diligence on the people that run small businesses. I can put more work in than everybody else. And I feel like I can generate myself a competitive advantage to play in this sector where if you're smart, put the work in, and are a durable human being, you can uncover those 5x, 20x returns. And that's what I look for. I look for those asymmetric bets when I'm putting cash to work on the speculative side of my barbell. But on the other side, it's all about just retaining the wealth that I built. And if I am fortunate enough to generate some wins on the speculative side, I pull those over and park them in the boring side. Now, at this point in my life, I have 3 kids, so my barbell is like 80% security. It's 80% boring stuff. Right? This is the war chest, right? The cash that I hope to never have to touch, but it's there just in case. 10 years ago, when I was single, footloose and free, no kids, I had a way higher risk tolerance and my barbell was skewed the other direction, right? I was all risk all the time and very few stable assets. Today, I don't want to take that risk, right? If things go south, I want to make sure that I'm good. Now, the other benefit of the barbell in your portfolio is that if I know whatever happens in the market, I'm going to be okay because on the stable side, I've got some bomb-proof, time-tested assets like gold, land, and cash. What happens in a market crash is that while everybody else is freaking out and panic buying and panic selling, I have a new option. I can choose to do nothing because I know that my exposure to that volatility is limited and I've got this nice safety net over here that's going to keep me safe, right? So in a crisis, everybody reacts. Everybody moves fast. They make quick decisions. They think short term and they make mistakes, right? What the barbell does for me is give me the ability to be patient, sit back and do nothing when a market crash occurs or when a market goes parabolic, right? When prices start running, right? I can sit back and just be patient. Does that make sense? Okay. So last thing I'll mention on this piece right here is that the whole value of a barbell is duration, right? It keeps you at the table. If you're wrong on the investment side, you're going to be okay because you've built out the protective side, right? Defense and offense. And duration is what wins in this game. If you look at any of the legendary investors in this business or outside of it, individuals like Rick Rule, if you're familiar with that name, you know, he is the legend in this business that he is because he's been an investor in this business for 45 years, right? He stayed at the table for a really long time. Warren Buffett is the Oracle of Omaha because he's been an investor for over 80 years, right? If he had started his investment career when he was 30 and quit when he was 65, like most people, he'd be worth less than 1% of his current net worth, and none of us would have ever heard his name. Now, he still would have made himself a lot of money, but the reason he's a household name is because of duration. He stuck around in the markets for 80 years. It's the same reason that the number one asset most investors ever end up owning is their principal residence, their house. It's not because real estate's always the top performing asset, it's because that's the one asset that they hold for 25 years and don't try to trade, right? Duration wins. That's why. So what the barbell does for me is allow me to step back and be patient.